If you're thinking about buying a home and you're wondering about buying down points, you need to check out this mortgage points break-even calculator that I just found. It's really cool. Hey there, welcome back to my channel. I'm Karin Carr and I am a realtor with Georgia Coast Homes and Keller Williams Coastal Area Partners here in Savannah, Georgia. If you are interested in all things Savannah real estate, you really need to hit that subscribe button because I post new videos every Monday and I know you don't want to miss one. So what does buying down points even mean? Essentially, your loan officer is giving you the option to pay a little bit more in closing costs in order to get a lower interest rate. It sounds like it might be a great thing, right? Well, what you need to do is find a good calculator to tell you whether or not it's worth doing. So check out this loan calculator that I just found on nerdwallet.com. This awesome Should I Buy Points mortgage calculator is on nerdwallet.com and I'll link it down below. What you do is you go over here and you type in the details about your situation. So let's say that your loan amount was going to be $200,000. You've got a 30-year fixed. You were given a killer interest rate at 3.75%. And your loan officer says, hey, if you pay 2 points, and that could be something like $800, $1,000, $700, somewhere in there. If you're going to pay 2 points, it would buy your interest rate down to 3.25%, which is crazy, crazy, crazy low. Sounds like a good deal, right? Well, let's look at this calculator and see what they say. The break-even period is 6 years. It would take your monthly mortgage payment from $926 down to $870. It's not that big of a savings. It's about a $50, $55 a month savings, and it would take you 6 years to recoup that cost. So if you know for sure you're not going to live in this house for 6 years or more, you think that it's a small starter home, you're going to outgrow it eventually, or you're going to move out of state, maybe you're in the military, you're going to get orders to go to a new station. If you know you're not going to live there for 6 years, then it doesn't really make sense to spend the money to buy down the rate. However, if you've got a 30-year loan and you're going to stay in this house, this is your forever home, after 6 years, you will break even. And then every year after that, for the next 24 years, you're saving money. So you just have to kind of know, how long do you plan to stay in the house? How much would it cost to buy down these points? And then come over to this awesome little calculator on NerdWallet and type in those numbers. So now you know all about buying down points and how to determine whether it's worth doing or whether you should just skip it and save your money. But have you heard about Keller Mortgage? They charge you far, far, far less in closing costs, which means less out of pocket for you when you're coming to the closing table. Keller Mortgage charges 0 loan origination fees, 0 lender fees of any kind. Plus, they give you $1,000 toward your closing costs that are left over and a low interest rate. So if you are thinking about getting a home loan and you have not yet chosen a mortgage company, I highly suggest that you check out Keller Mortgage, because when you come to the closing table, the less you have to bring out of pocket, the better. I'll include that link in this video as well. If you're interested in all things real estate in the Savannah area, you really should watch this video next. And don't forget to subscribe because we put out new videos every single Monday. See you next time.